What's up, traders? I'm Hotshot. Disclaimer, this is not trading or financial advice. Please trade and invest at your own risk. I trade live on stream here on this YouTube channel Monday through Friday, 8:30 a.m. through 11 a.m. Eastern Standard Time, which is New York Standard Time. Come join us. In this video, we're going to talk about the optimal trade entry. We're going to back test it on the 1 minute. I have a great video that's specific to the 5 minute, that's specific to ICT's optimal trade entry pattern recognition series. All 20 of his videos summarized into one on my channel. It's a 56-minute long video. Go check it out if you're interested. Now, this one is going to be specifically for beginners. I have an addition to the optimal trade entry that will allow beginners to see this pattern very easily just by approaching the charts. We're going to do it on the 1 minute. I'm going to show you it, then we're going to back test it. I'm also going to give you all the rules. Now, we drop to the 1 minute on Euro USD. We're going to apply this to Euro USD. What is the optimal trade entry? The optimal trade entry is the act of buying or selling retracements after a break in market structure. Example, right here. This was an old high, price expanded through that old high, break in market structure, retracement, and we buy the retracement. And the way that you frame that is using the Fibonacci right here. Boom. And the ICT says he likes to enter off of the 0.60 level of the Fibonacci. But that's just to assure him that he gets in due to spread reasons. The optimal trade entry range is from 0.62 to 0.79. The optimal trade entry level is 0.705. Now, if you need the settings to these fibs, these are them. Go ahead and pause your video, add them to your charts. Now let's go ahead and get started. The optimal trade entry, we're going to have a little bit of a steps to the slingshot. The addition to this OTE is going to be the slingshot. How are we going to use the slingshot? I will show y'all right now. Now, what makes the optimal trade entry optimal, you may ask? Isn't it just Fibonacci trading? Well, ICT says the reason why it's an optimal trade entry is because it comes in at a specific key time of day. And that time of day happens between 8:30 through 11 a.m. Eastern Standard Time, which is New York Standard Time. And if you don't have your charts set to New York, you can set them right down here, New York. Just look for New York. The UTC doesn't matter. It changes for everyone. Just look for New York. And that is why you can come and check us out, watch us trade live during that time, Monday through Friday. We're trading this setup in that time. Now, optimal trade entry, we're going to go to 8:30 time because that is the time that makes it optimal. So let's go and skip ahead. I'm going to jump to the 5 minutes so we could get there a little quicker. 30 right here. 8:30 to 11. So step one, delineate your 8:30 to 11 time. Now, in my 56-minute long video and also in ICT's pattern recognition series, he says you want to get the daily draw on liquidity. Now, we're not going to be targeting the daily draw on liquidity here simply because we're trading the 1 minute and we're looking for really quick entries, really quick, scalps. Now, I'm going to apply some EMAs. These are multi-time frame EMAs specifically. It's if you go right here to your charts and you go to the indicators, metrics, and strategies and look up MTF EMA, you will see by Finsman 172. You're going to star it, you're going to add it, and then once you have it, you're going to uncheck these two. Just keep these two on your charts. It doesn't matter the colors. You are going to set them, you're going to unclick this box, set it to 1 minute. Your first one is going to be 9 and your second one is going to be 21. Okay. So now if we look at my chart, the orange line is 21 and the green line is a 9. Whenever the green is below the 21, we're looking for sells. Whenever it's above, we're looking for buys. Now, when price is extended away from the EMAs, it's in an expansion phase. We want to wait for price to retrace back into the EMAs, much like it did right here. This was like an expansion, retracement, and it failed to hold the retracement. It reversed, as you can see. Now, what we're waiting for is that retracement on the 1 minute. It's expanding, expanding, expanding. There's retracement. Now, once it expands and it begins retracing, we're going to frame our optimal trade entry. Where are we going to frame it from? Well, I know that we know what's going on right now, but let's just put it to right here really quick. So what we are looking for specifically are the very most current last 3 candle swing wick pattern. So it is this low here, this low wick. Why this low wick? Because this wick was lower than the wick to the left of it and the wick to the right of it. Since both of these wicks were higher than this wick, this makes this wick the low. And this is a swing low here. Same thing up here. We're going to be anchoring our point A of our fib right here off of this swing high right here. Why? Because the wick to the left of it was lower and the wick to the right of it was lower as well, making this the swing high. Another swing high is right here, but we're going to anchor right here for now, okay? So that's the way you're going to do it. Go back through your charts, train your eye to see those wicks. The wicks, the high wicks, lower wick to the left and lower wick to the right makes this a swing high. Higher wick to the right and a higher wick to the left makes this a swing low, okay? So that's how we're going to frame our fib. From here to here is going to be our frame, okay? Now, what we are going to do is we're going to set a limit position, a sell limit entry order right here at the 0.60 level. We're going to put our stop loss to the next institutional level above the 1 if you're selling, below it if you're buying, okay? Now, what are we going to target? We're going to target a 1 to 2. On the 1 minute time frame, we're going to target a 1 to 2, okay? Let's see what happens. Okay, we're triggered in. Didn't necessarily get stopped out. Maybe we would have got stopped out by spread, but let's just say we didn't. We got stopped out right here instead. Now, the trade, what happened, it did take out the level here, the liquidity. You really want to target this level right here. It did hit a 1-to-1 R, which is good because it was technically a winning trade, but we were targeting a 1 to 2, so we won't count it. We'll count it as a loss, okay? But if you notice, price expanded, retraced, and it retraced into the optimal trade entry zone from 0.62 all the way up to 0.79, okay? From there, you want to have your limit order set so you can make sure you're triggered in, and then you can see it expanded. Your first target is usually going to be the liquidity here. We just have a set target of a 1 to 2 R right now. You can see that it did hit this though, okay? But as soon as it retraced, this is the slingshot buy hot shot right here. Once it retraces into the EMAs, see how the EMAs act like a band, they stretch and pull back, and then they slingshot price down. Look at these bear candles right here. Boom. That's a slingshot right there. If price comes back in between these EMAs and these EMAs hold that direction, the 9 is staying below the 21, you already know price is going to come down. We're not using crossovers here, you guys. We're not using the crossovers. We're using them as like a dynamic support and resistance in a way. Think of it like that. And if they don't cross over when price retraces into them, that's a very likely setup for a sell, like example here. Okay, so let's just say we took a loss. We'll just put an anchor text right here. 1L. We'll put L1, W's, none. We'll put like 1, R hit, 1, 2, R hit, 1, 3, R hit. Okay, so we'll just say that 1 hit, but we're targeting a 1 to 2 for the strategy, so we'll just say L. Now, these are some rules that I want to give to y'all. I'm not going to provide you guys with this document, so please don't ask me in the comments. Pause your video and take notes right here of these steps right here, these rules. I'm going to say them. You can screen record, like sound record, whatever you got to do to save these notes right here. But you never ever want to trade during red folder news that's scheduled during our window. Any news from 8:30 to 11, you want to stay out. If we're in a trade and news is coming, you want to close that position. If news passes and no more news is coming, then we can look for setups. So just to reiterate that, from 8:30 to 11, if there is news, you can look for it. Like, let's say news is coming out at 10. You can look for a setup from 8:30 up to 10. If you're in a setup from 8:30 to 10, you want to make sure you get out before 10, because once news hits, you want to prevent slippage. You do not want to be in the markets when news hits, because slippage happens. If you're risking 1%, that 1% can turn into 4% or more very quickly due to slippage. It happens all the time. Now, once that news passes, then you can go ahead and look for more setups as no more news is coming, okay? Optimal trade entry is based on buying or selling retracements after a break in market structure as said by ICT. So you just want to follow the correct swing points with fibs, follow expansions, retracements, allow one liquidity run. If it fails to reach higher highs or lower lows, then we'll just walk away, okay? 2 losses is what we're going to allow here. 1 loss on the turtle soup. So once we anchor our fib, let's say, for example, right here, this was the entry, right? Let's say it didn't take out this level. Let's say it came right here and then it took us out right up here. We would re-anchor the fib to this level here, re-enter, consider this a turtle soup, a run on liquidity to then continue back down. And if this one gets stopped out, we'll call it a day, walk away. Okay, so second loss, if we reframe our fib and price stops that one too, we walk, okay? Within a 3 candles swing wick to, hold on, wait, within a 3 candle swing wick to 3 candle swing wick, main range price can retrace, then expand through a minor swing within that range, creating a smaller 3 candle wick swing to 3 candle wick swing range. That price can retrace into OTE and then continue expansion for the main range. So what this is explaining is that, let's say that price has this expansion right here that we're framing on, right? Let's say it has this expansion that we're framing on, and then price comes here to OTE, we enter, and then it does this, and then it creates this. Right here is an OTE within a larger OTE. Price can very likely come down, tap into this where we can enter a scale in opportunity. We're already in profit here. This can be a scale in opportunity where we can then look for longs to take out this high, okay? So that's what this rule is explaining here, okay? So, and OTE will occur at a key time of day. It's a specific time window that begins at 8:30 and ends at 11 a.m. New York time. In this time window is when the pattern often forms. However, it can also form before 8:30 or when 8:30 opens, price can tap OTE and take off. So like whenever 8:30 opens, price can tap into OTE at the 8:30 candle and just take off. Or it can also set up through the 8:30 to 11 window, or there can be multiple setups where it sets up before and during, or even just during multiple times. Specifically though, you want to take entry within this time window, okay? If you're trading a Monday, you want to delineate your Sunday trading 16 through midnight, 16:55 through midnight times, and of course set your time to New York so it's at these times, which is Sunday's trading. So before 16:55, ICT does delineate Friday's high. So if you're targeting Friday's high or Friday's low, and we're trading Monday, you want to disregard Sunday and consider Friday's high or Friday's low. In this situation, for this specific setup, we're not really targeting the previous day's high or low, which would be Friday's high or low in this situation. So you can disregard that, but if you're targeting those previous days highs or lows, this is a good rule for you. If price trades to and through the previous day's high or low when that previous day's high or low was our target, and this happened before New York session, even if it was a shallow run where price just wicked it doesn't negate looking for a setup in the New York session 8:30 to 11. You want to stick with where the liquidity is going to be reaching relative to the previous day's high or low. And if it's not really clear, just simply stay out, okay? Another previous day's higher low rule. Excuse me. It's okay if price trades a little past our 79% retracement level. That is fine, okay? Just a little rule. Don't freak out. It's okay, as long as they don't tap our stop loss. ICT says if price taps the OTE level at exactly 11 and that previous day's high or low target hasn't been reached yet, that this is a valid entry, even if it's the second OTE set up in the session from 8:30 to 11, okay? That's another very logical rule. Hopefully you can understand that. If you're bullish, you want to attach the one level of the fib on the most recent 3 candle swing low and drag the 0 fib level up to the most recent 3 candle swing high after price takes out a previous high. If price makes a new 3 candle swing high, then drag the 0 fib level up to that one and leave the one level of the fib alone. And if price takes out the one level of the fib, we will consider this a turtle soup, which is one of ICT's concepts where price will sweep liquidity, then turn the true direction. In this case, we will leave our 0 level of the fib alone, but drag the one level of the fib down to the next 3 candle swing low wick we come to, and we will look to take entry off the OTE there. If this gets stopped out, walk away from this setup and let it go till there's an obvious direction. Now, if price happens to take out another 5 minute or another old high and makes a new 3 candle swing high and 3 candle swing low, we will disregard the one we have annotated and annotate this new one and prepare to take entry off this new one. Okay, so this is like if you want to allow yourself a third loss, okay, which we're not going to be doing with this back test. This is if you want to allow yourself a third loss. Now, this next rule is the same thing, just vice versa. So you could just take that and flip it. But I'm going to move to the next rule. When calculating stop loss, you want to always add 5 extra pips to your stop loss for spreads. So if your stop loss is 15 pips, you want to add 5. So your true stop loss is going to be 20 pips whenever you're calculating it, okay? And to prevent emotions, if/when you place a trade in, you will leave it in until it either hits stop loss or take profit. Unless news is about to hit, if we're still in the market, you want to close that position. Doesn't matter the outcome, in profit or in loss. We want to prevent slippage, but to prevent emotions, when you are in a trade and there is no news coming up, you will leave it alone until it hits your take profit or your loss, okay? If you have a position running into profit, stay with your 1 to 1.5R, your 2 to 5R, whatever you target. Don't allow your brain to play mind games thinking price is going to turn back around. It can, and that's fine. You want to stick to your plan. Do not close early before that take profit is hit, okay? We do not trade retracing wicks. It must be a clean expansion with retracing candles, not just wicks wicking into OTE. That's an ugly setup. Don't trade it, okay? Now, even if the stop loss is huge, where price has a good amount of pips just to hit 1 to 1R, it is still a good trade to take if everything makes sense and it is valid, okay? Now, if price retraces into OTE, then begins expanding, but fails to make a higher high or lower low and comes back to OTE again, even if it's a liquidity sweep, and even if it isn't, this is still a valid area for entry. So enter. If it's like a double bottom, double top, or a turtle soup, it's still a valid entry. If you're not already, if you missed the setup, for example, if it came in optimal trade entry, started moving away and you missed that setup, you're like, oh damn, that was a good setup. If it comes back, gives you a turtle soup or a double bottom or something like that, you can enter that setup. It is still a valid setup, okay? You never ever allow your emotions to prevent you from entering an OTE. You take that freaking setup. Price is unpredictable and we have no clue what OTE or Slingshot will hold. We trade with probabilities and good risk management. So you take that setup, okay? And if price gives a 1 minute OTE setup, however, price is like far expanded from 5-minute EMAs. If you're using 5-minute EMAs as a framework, like letting you know where price is and where it potentially can go, like come, if it can possibly come back to the 5-minute EMAs, you still want to take that trade. If you get stopped out, reframe and take that second trade, and you want to follow these rules. I have seen the second trade work out for 1 to 1.5 R minimum. We live streamed it. It was last week. It's all about probabilities and trading, what you see, not what you think, okay? I thought there that price was going to retrace back into a 5-minute retracement. Instead, the 1 minute gave an optimal trade entry slingshot, and my mind played mind tricks on me. I didn't follow my rules. I took a loss, didn't allow the second one, and the second one worked out. I would have made back my loss and some profit. So stick to your rules, stick to the game plan, y'all. Okay. Now, with all that being said, let me catch my breath. Now, from here, if you notice, price has now expanded through an old high. Boom. And this was technically a win, so we will consider this new direction. If we would have got stopped out, we would have looked for another entry. This would have been a stop out, but it's not. So this right here is an expansion. We're going to wait for a 3 candle wick swing high to create. There it is. Now we're going to attach our fibs, most current 3 candle swing low to the 3 candle swing high. Now we're going to look to take entry off the 6-0 level, okay? From here, and we're going to go to the 80 level. We're going to put our stop loss at the institutional levels. If you don't know what the institutional levels, they're the 80s, 50s, 20s, and 0-0 levels. So this is currently 80. This would be the 50 level right here. Boom, 6750, see that? And then the 20 level would be down here, and then the 0 level is a little far beyond, but you get the point. Okay, so we'll just put it at the 80 because it's the next nearest institutional level. We're going to target a 1 to 2 R on this position. Okay. We are in the trade. Notice the EMAs are slingshotting. The 9 is kind of sloping down. Not a good sign. It did wick below the 1 level, but it has not stopped us out. That was a winner right there. It did not stop us out. It did wick below the 1 level. You could reframe it to make yourself feel a little bit better. Don't mess with your stop loss. Didn't come near it. We are all good here. So that's a 1 to 2 R hit. So we'll say 1 win, 1 loss, 1 to 2 R hit. And then some, a hit like, and then some. Now, let's say that you wanted to scale in on this opportunity right here too. It expanded through this high, right? Once it expanded through that high, where was the 3 candle wick swing high? Let's say that it was this candle right here, right? Where was the most recent 3 candle wick swing low? Was right here to the high here. Retraced from the green candle retraced, it was already in there. Tapped in, and then it held and expanded again. But let's say we didn't catch that. Let's say after this day, we walked away, right? We walked away, whatever. Let's see if there was more setups. There was another setup right here. You attach your low to your high here. Why? Because it expanded through this high right here, right? Boom, boom, tapped into our green level. Let's see if it takes off. No, it did not. Now, in this situation, we're not taking this trade, of course, to add it to our losses or wins. Maybe we can. You know what? Let's just do that. To get a true reading on the risk to reward ratio, let's just take everything, okay? So let's say that we took this trade right here, right? Then again, would we take this trade? Because it was already wicking into there, right? But our rule is if it comes back, we can take that trade setup, right? Because we have a rule where if it's just wicking down into it right away, we need some clean candles like this, clean candles coming down into it for a retracement. It's just wicking, we won't take that. But right here, it came down for another retracement, gave like a double bottom scenario. Let's just say we took that buy right there, boom. Stop loss would be below here. At the next institutional level, it would be the 800. This hit, it 1 to 2 R, and then some. So we'll say another win, 2 wins. Now, let's say, now after that, we have this set up here, right? We just took a loss, right? We will count that. 2 losses, okay? We just took a loss because we bought right here. We took a loss, so now we're going to reframe it. Where are we going to reframe it to? To the next 3 candle swing low. That makes sense. This one, it makes sense, but at the same time, it's not very logical. Why? Because price is already close to stopping it out. So you want to go to the next one that's logical. Right here is a little bit logical because again, one of our rules is price can trade a little past the 79% level and then it can come back. Okay. So we can frame it from right here. Let's say we did, and we took an entry right here. And then stop loss would go at the 0, 0. Okay. Now our targets here, our stop loss is a little smaller, so like a 1 to 2 will be hit a lot easier compared to like running out the liquidity. So like 1 to 3 R is very likely to get hit here, but we're targeting 1 to 2. Okay, so let's just see what happens. We got stopped out, another loss. So we took another loss, 3 losses. Usually we'd walk away at this point. After this, we walk away. We would not trade. This is not our setup. We're done for the day. Okay, as per our rules. Okay. That's crazy. What if we would have reframed it? Look at this. If we would have reframed it on this low down here instead. See that? We would have reframed it off this low down here instead. It'd have been different. That'd been crazy. But we're gonna go to the next day since we're walking away now. That's crazy. That's amazing. Look at how accurate it is hitting the levels to the T, because this level is 104 and this candle's high was 103. It was just 1 point off, barely. Like, I don't even know if that's a point. But this is how you trade the 1 minute, you guys. So let's go to the next day. Where is it? 8:30 is going to be right here. So let's go to it. Just before it, we'll drop back to the 1 minute. Now, what are we looking for? We are looking for an expansion that breaks structure through an old high or an old low that is expanded away from the EMAs. At that moment, we want to attach our point A of fibs to the most current swing level high and wait for the swing level low to form. At that moment, we'll attach our fibs, we'll set our limit order. Okay, so let's see what happens here. Currently, price had this opportunity here, but it was before 8:30, so we didn't trade it. It just expanded through this low here, so now we're going to attach our fibs from this high. And this was a 3 candle swing low, right? Now, this is another thing that I want to cover with y'all. If the 3 candle swing low gets traded through for like further expansion, but it doesn't create a 3 candle swing high, you just simply drag to the next low. Okay, vice versa. Now our entry point is going to be the green line. Remember, stop loss will be at the next institutional level, which would be the 800 level here, and we're targeting 1 and 2. Let's see what happens. Okay, so in this situation, it expanded further. It hasn't came back into our EMAs for a slingshot. Okay, but in this situation, it created a new high. Swing work high right here, so we would take the new one. And we're looking for the low to form, which is right here, that just formed. Now we're looking for clean candles to retrace into this, okay? It just created a new low, so we're gonna reframe it. And we're just gonna drag our point B down here. Now we're waiting for a clean retracement back in. Okay. Gonna set our levels, our entry. Our stops will go at the 50, and we're targeting 1 to 2. Let's see what happens. Now, this is what we're using the EMAs for is just to understand if price is an expansion and what direction it's expanding to. You know that it's expanding to the downside. It's expanding away from the EMAs. Once it retraces back into the EMAs, like how it did right here, like how it did right here, like how it did right here, that's when we're looking for the entry already. We have our entries already set, okay? We're not looking to manually enter. We're in there. Okay, same situation as the first setup. It hit a 1-to-1 R. 1 to 1.5 R was hit as well. I'm also going to annotate that. So we'll say that 4 wins, but we lost. So we'll say that it was our 4th loss. Not 4 wins, but 4 1-to-1 R's here. Okay. Now, at this moment, since we got stopped out, but it did take out this low here, this was valid. So we wouldn't re-anchor. We would only re-anchor if it came like right here and then stopped us out. Then we'd re-anchor. So in this situation, we'd consider this a change in market direction. And this right here would be technically a breaker pattern. Okay. We're not trading breaker patterns, but this would be a breaker pattern. Okay. Now right here, it expanded through the high. If you added the optimal trade entry here, and you took your buy off the green line, stop loss goes to the 50, target of 1 to 2. Okay, we're in there. Take profit hit. Boom. 1 to 2 R hit. That's another win. Okay. Now it has expanded. Right here, it gave you a second optimal trade entry. I know the charts are getting a little ugly. I don't want to delete them in case y'all are still looking at them, trying to understand them. I am just going to move this over a little bit. Boom. Move this over right here. Boom. All right. Now, if you notice, it expanded through, took out this high, right? Now, if you would attach your fib level from here to here, it didn't retrace, but it broke out through another high, right? At this moment, it created a swing low, expanded, break a structure, created a swing high. You would just simply drag your fib point A up to this new swing low, point B up to the swing high. It expanded away from the EMAs, broke through a high, waiting for the retracement. You're going to take your buy off this level here. 20. And let's see, did it hit a 1 to 2? It hasn't quite yet. Let's see, it's expanded away from the EMAs. Let's see if it retraces again, potentially gives another entry. If so, we would reframe it from here. It created the swing here, but it kept expanding, created a swing here. Now it's created the swing low here. So if it expands more, we'd re-anchor this new fib to this low into the new high, okay? So let's see what happens. Okay, so this is our buy opportunity right here on this one as well. And a stop loss would go to the 20 level. We're targeting wins 2R as well. See what happens. This 1 to 2R got hit, so we'll count that. Another win. We're not even looking for 1 to 3 at this point, so I think 1 to 3R got hit a bunch. 4 wins, 6 1 to 1 R's hit. Let's see. So now it just expanded took out this liquidity here. Here's the low here. We're currently in this trade. We went from here to here. Why? Because it expanded away from the EMAs, break a structure, took out the old highs, swing low to swing high. We'd set a limit order there. Stop loss would go to the next institutional level, which would be 80, and we'd be looking for a 1 to 2, which would get hit before this 1 to 2 gets hit. Okay, we're in, and we got stopped out on this one. So since we got stopped out on this one, we can reframe it. We won't reframe it here because it doesn't make sense. It's already stopped out there. We reframe it here, it's at the 7-9 level. So it's a little scary, but if we reframe it here, it'd be re-entering at this level. We'll put our stops at the 20 right here. Boom. So it's the same stops as this one, and we want to see if this one still hits because we're in this one. We're just re-entering this one because this one got stopped out. We're just sticking to our rules. Realistically, if you don't want to enter this one, you shouldn't because it's technically like the same entry as this one, same stop loss and everything. So we'll just leave it alone for now. Stopped out. Okay, we'll say that both of these ones got stopped out. So 2 losses right there, okay? 2 losses, so 6. At that point, we took our 2 L's. We're gonna go to the next day. We don't even want to mess with it, okay? But we got a good little portion of wins right there. It was pretty sweet. All right, let's go to the next day. The next day, we're gonna go to 8:30. Boom. Let's see. Okay, drop to the 1 minute. All right. All right, now price has expanded, right? And at 8:30, it's retracing. Remember our rule. Price at 8:30 can retrace, tap into OTE, and then move away. So we're going to look to see for a potential opportunity right at 8:30. So swing low here, swing high here. So swing low here. And then it created the swing low here, created the swing high. We're waiting to anchor it for the swing low, because if this candle hadn't opened yet, we're waiting for the swing low to form. Now it formed here, so now we're just going to re-anchor because that one doesn't make sense. We want to place it on what's logical. This is logical, and right here we're going to place our sell limit here. Stop loss is going to go at the next institutional level, the 150 right there. Boom. We're going to target a 1 to 2. See what happens. Okay, we're in. And look at how the EMA is held and the slope is sloping down. Beautiful. 1 and 2 are hit right at the beginning of the day. 5 wins. 7, 5. If you guys are enjoying this video, I would really appreciate a like on it. It really helps out the channel grow. And you know, it shows how much you support me. I really appreciate the support, you guys, from the bottom of my heart. You know, it really is great. But from here, it took out this low here. Now we're looking for, we're going to anchor the low, the high to the low here. We'll look for the sell here. For this, stop loss will go right here to the next institutional level, which would be 50. Boom. 1 and 2. This is a little big, but we got to take it, stick to the plan. All right, we're in. All right, look at how the EMAs are about to cross over. That's not a good sign. Okay, past the 1 level. Stop this out. A loss. 7 losses now. In this situation, we're going to re-anchor, okay? So where are we going to go to? Where's logical? This is logical, right? Let's go up one more just to give us a little bit more confidence, okay? It's logical. And that reframing is going to be all user subjective. So like you, however you want to frame it, whatever makes you feel a lot more comfortable, that's how you want to get it done. You know what I'm saying? All right, from here to the 80. Now we're targeting a 1 to 2. Let's see what happens. Stopped out. Call it for the day. 8 losses. Calling it, walking away for the day. Let's come back the next day, okay? I want again. Okay, right there. All right, now wait for 8:30. Expansion. It's expanding away from the EMAs, telling us that it's bullish. It expanded through these highs. We're waiting for a high to form. There it is. Now we're going to anchor from this low here to this high here. We're going to set our buy limit here. Our stop loss here to the 50. Boom. Target 1, 2. Let's see what happens. Nope, it didn't work out. It only came to the 50, which is fine. It expanded. Let's wait for a high to form. There it is. Let's delete this entry. Let's reframe right here to here. Now we're going to look for a buy right here. Stops will go at the 50 here. Target 1 and 2 here. All right, let's see what happens. All right, we're in. And we got stopped out. Okay, another loss. 9 losses. Now we're going to reframe to right here. Makes sense. Re-enter where it's at. Boom. That'll be a manual entry. Stop loss will go to the next level, which is going to be right here, the 50. Target 1 and 2. Boom. Let's see what happens. The EMA is crossed over. That's not a good sign. It hasn't hit yet. Come on. We're right there. Oh my goodness. Nice. But turtle soups happen, bro. That's why we reframe it. Look at stopped out. It took out the liquidity there, right? And that could have been a breaker pattern, right? Turtle soups happen, bro. Look at that. Beautiful. Beautiful. It continued for a 1 to 2R. We made back our money. 6 wins. Boom. And that's why we have that rule, okay? Boom. Boom. Beautiful. And throughout that time, you've seen the expansion here. It expanded up through this. There was an optimal trade entry there as well. From this low to this high. Boom. Say we would have took that one. I know this part is hindsight, but we're learning, right? We're training our eye. We're adding to our potential win rate. Let's say we would have caught it, right? No, I'm just kidding. But look at that. 1 and 2R was hit, and then some. Took out this high right here. Took out the high. Just kind of bring it. Once it took out the high right here, retrace, but it was ugly. And then there's this beautiful expansion away from the EMAs. Beautiful retrace back. Look at the slingshot. Look at how the EMAs held right here. If you would have framed it from here, get this, from here to here, look at how sexy that setup is. Look at how much confluence there is there. Look at how much confidence you would have in taking the setup, bro. If you would have took the setup, you would have been a winner. Set your limit. Stops go to the 80. 1 and 2. Beautiful. Beautiful. It expands through, creates another low, expands through. Look at, if this is a tiny, tiny one, but look at, it expanded through this high right here, created another swing low from this point up to the new high, boom. Now, we likely wouldn't have taken it because this candle had to close in order to create the swing high, and it closed down there. Maybe we would have taken it, but it would have been a manual trade. And still, boom, beautiful, 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 beautiful. Look at this one too. Look at this slingshot. Came into this one right here. Let's say if you would have framed it right here to here, right? And you would have taken that, and let's say that your stop would have been at the 80 level, it wouldn't have been stopped out. But let's just say it did get stopped out, right? Turtle soup. Reframe it. Get your money back. Bro, I'm telling you, this setup is so freaking sick. You don't need any other ICT setup. No silver bullet. No freaking 2022 model. No unicorn setup. You don't need anything other than this. But with that being said, we went ahead and took, I didn't count these ones. If I did, it would have been crazy. But let's just say that we counted all this. 6 wins, 9 losses. How many is that? Out of 6 out of 15, watch. 6 plus 9 equals 15. I don't even know the percentage on that. I need a percentage calculator, but 6 out of 15, that's a terrible win rate. It's not that great of a win rate. We need to go for way more, but I don't want this video to be too long. I hope you guys got the gist of this setup. But 1 and 2 are, let's say that we took 1% losses, right? So we're down 9%. We hit 1 and 2 are 6 times 1% by 2, that would have been 12%. We would have been up 3% on this account total. Okay. And the amount of losses that we took in a row was probably like what, 2 in a row, 3 in a row? Who cares? Doesn't matter. Overall, we're going to be profitable with this setup. Keep back testing it. Let me know your results. Comment down below what you thought. And also, thank you all for watching. I appreciate your time and I enjoyed your company. If you learned something or enjoyed my company, please like the video and subscribe for more. Don't forget to click that bell so you know when we go live to trade. Until next time, happy trading, good luck, and take care. Later, y'all.